And so that's exactly how you do that. You trade the illiquid assets, you move them into liquid assets, but you do it all tax deferred.
How do they stay liquid without really kicking in any tax consequences and being in a hard spot?
Great question. So according to the American Bankers Association, there's about 17 to 20 trillion dollars, Lee, that's going to pass from one generation to the next in the next 20 years. And this is known as the baby boomer generation. And it's the largest wealth transfer in the history of the planet. Okay, and I want you to think about this. Every single day, there's about 10,000 baby boomers in the U.S. alone that is turning 65. And there's about 77 million in the U.S. alone. And what are they faced with? Toilets, trash, liability, businesses. Okay, a lot of things that take up with their time, energy, and they want to trade it for retirement, travel, less debt or no debt, liquidity to enjoy their wealth. But they feel trapped. What are they trapped by? They're trapped by the 30 to 50% in capital gains tax and depreciation recapture. So they got to find a tool or a way to get them out of that, to get them to the state they want to be in. So the best way we found to do that is the Deferred Sales Trust, because you don't have to put it in like-kind real estate. You can put it in stocks, bonds, mutual funds. Once the trust funds are in there, you don't have to follow the like-kind. You can put it into hard money lending, so you can diversify. You can put it into other pieces of real estate. So when you actually sell the asset, we pay off all the debt, and we move the proceeds into this trust. And now you're in a tax deferral state until and if you receive it. And by liquidity, we mean trade plus 3, meaning you can access the funds by selling out of securities. Or a lot of people just put it in hard money lending. They don't, for me, I'm a real estate guy. I don't necessarily like securities per se, right? Look at the stock market. It dropped 35, 40% in 2 weeks, right? So I prefer real estate. That being said, there's a time and a place to buy real estate and a time and a place to buy stocks, maybe when they're low, like right now. And then to redeploy when it makes sense for you. So the key is, what are you trying to do? What is your vision? What is your current stage of life? And how do we basically make this wealth plan that matches up what you've envisioned your life to be? And that being said, if you're a business professional, we want to empower you with this strategy so you can grow your business too, because let's face it, automation is challenging the value proposition of every realtor, every financial advisor, every commercial real estate broker, and even before Corona, right? But especially now with Corona,
right,
it's going to accelerate what was already there. So how are you adding value? How are you justifying your 3, 4, 5, 6% fee? Well, if you can walk into a situation and save somebody $300,000 in tax, like we just did for a single family homeowner in Cupertino who sold her home, and above and beyond her 121 exclusion, which basically states if you lived there 2 of the last 5 years, Lee, you have $250 cash, tax-free, or $500 if you're married, tax-free. Well, above that, her property's worth $3.1 million. So what does she do? Well, she's in this big house. She has all this debt, and it's, a single-family home, primary home, is to us is not an investment. It's a liability. An investment is when you can take that capital, what she did, she sold, pay off the debt, and put it into an asset that's producing cash flow. And so that's exactly how you do that. You trade the illiquid assets, you move them into liquid assets, but you do it all tax deferred.